Bitcoin just hit its most oversold level versus gold in recorded history. Let me say that again. Most oversold in history. And for context, the last time this indicator flashed, Bitcoin went on a furious 660% rally that made Peter Schiff his depends 660%. Now, despite history and math, the bears are on the loose. They have a specific theory they're hypothesizing, and I use that word generously, the downfall of Michael Saylor of strategy. And they genuinely believe, that if strategy fails, Bitcoin kicks the chair. Well, Larry Lepard isn't having it. He just went face to face with the ex-macro heavyweight, the Saylor unbeliever known as, quote, the Raven. And Larry brought the hammer down. Stick around, because by the end of this video, you're gonna understand 3 things. 1, the actual math behind the strategy death spiral narrative. Spoiler, it's not really math. 2, what Larry Lepard thinks Bitcoin hits if the bond market actually breaks. And one of those numbers has like 4 commas. 3, why one of the most bullish things I heard in the entire debate was somebody saying, I don't know. We got a lot to get into. Look, I'll be honest with you. When I first saw, quote, the Raven and Larry going at it on X, my first instinct was, well, we've seen this episode before. Then I actually listened, and here's the thing. Raven is not stupid. Actually, I'm a fan of his macro analysis, despite his Saylor and Bitcoin bearishness. Same with, finance a lot. He's not a troll. He raises real questions about management credibility, about leverage, about what happens to strategy if Bitcoin drops 50%. And they're staring down a $1.7 billion annual dividend obligation. Those are real questions. But Larry does something many wouldn't expect. He doesn't dodge them. He takes every single question head on and hits it with a sledgehammer of actual math. And that is worth 15 minutes of your life. Don't forget to click the subscribe. Here we go. In one corner, quote the Raven, ex-macro heavyweight Saylor unbeliever. His argument, and I'm paraphrasing slightly, these Bitcoin religious zealots are going to get wrecked. Obviously, he didn't read the prophecy. In the other corner, Lawrence, Larry Lepard, hard money legend. This man has been calling the collapse of the fiat system longer than most of our viewers have had a driver's license. Larry did read the prophecy. We got a good one today.
They thought that he wouldn't be able to service the 1.7% dividend, which, if you look at the math, the balance sheet, it's kind of patently absurd. I mean, he's got
it's a $1.7 billion dividend. It's not 1.7%. It's
11%. It's a $1.7 billion dividend on an enterprise value of 52 million of Bitcoin that he's got, plus another 2.6 million of dollar reserve. So he's got 54 billion of things that he can use to basically service 1.7. I mean, it's very hard to see how there's going to be any kind of a problem, coming up with 1.7 when you're talking about 54.5 billion of assets, right? I mean, it's just, Bitcoin's got to go down, 60. Right?
Yeah, that I agree with you. I don't contest that. If there's one thing that I think we could probably stipulate that makes both of our points, and really the fact that I'm trying to get across is the larger the cash outlay obligation becomes and the lower the price of Bitcoin comes, the far more risk there is to the company.
Oh, there's no doubt about it.
Right. Then there would be if this was just a company sitting on unlevered Bitcoin. And that's the only argument that I'm making, which is that the plunge could accelerate quickly. You use the term death spiral. I try not to use terms like that, but shit could hit the fan to the downside quicker because he has these capital requirements, and because the higher he raises the dividend and the bigger that obligation gets and the more debt they take on, any type of cash obligation or leverage they put on top of this pile of Bitcoin, the bigger that gets, the smaller the move has to be to the downside to trigger sales, right?
Okay. Let's try to steelman that because you can't dismiss it. His argument isn't that Bitcoin is worthless. It's more surgical than that. It goes kind of like this. Strategy has built an extraordinarily complex financial structure on top of Bitcoin as collateral. Preferred stock, convertible notes, a $1.7 billion annual dividend obligation. That is B, like B for billion, not 1.7%, billion. If Bitcoin drops 50%, Strategy's ability to service that dividend gets genuinely stressful, somewhat. And if the market loses confidence in management, especially with Saylor selling $370 million in stock, you get a forced unwind. Forced unwind means they're selling Bitcoin into the market during a drawdown. That's a bear case. And look, it's not insane, but Larry has the receipts.
The whole notion that you give a platform to a guy who says that this thing is going to go into a death spiral, a guy who's been dead ass wrong about Bitcoin for 16 years, a guy who's cost thousands and thousands of gold holders millions and millions of dollars of potential upside. I mean, I'm like, what? What's that all about? And so Phong Le decides to change his messaging from, we're going to grow Bitcoin per share, which, by the way, they still have year to date. They grew their Bitcoin 25%. They grew their shares 19% for the 6 months just ended. So they are still growing Bitcoin per share. Then they go out and they sell 3,000 Bitcoin, which, by the way, 3,500 and some Bitcoin, which, by the way, is 0.3% of what they hold. And everybody freaks out that we're going to get into some liquidity cascade, or that's going to cause the market to turn. I mean, Chris, this thing, Bitcoin trades $27 billion a day. $27 billion. MicroStrategy is 4% of the total outstanding Bitcoin supply. And, Bitcoin's going to make it whether MicroStrategy makes it or not. I mean, one of the narratives that a lot of people have been saying is, well, MicroStrategy is now a seller and they've been the marginal buyer, which isn't true. And that therefore, now that they're a seller, the marginal buyer has gone away and the thing's going to collapse. That just doesn't make any sense. There's absolutely no sound business or economic logic to support that argument. Zero. It's ridiculous.
Yeah, let's park on those numbers for a second, right? Because the numbers are kind of violent. Strategy has $54.5 billion in Bitcoin plus cash against $1.7 billion in dividend obligations. I'm not a math professor, but it seems fine. And then the 3,500 Bitcoin sale that had bears running wild on X, 3,500 Bitcoin. Strategy holds like 840,000 Bitcoin. That's 0.7% less. Actually, that's like draining a teaspoon out of Lake Michigan, running to Twitter, saying the river has run dry. The Euphrates is gone. That is exactly what happened. And the daily Bitcoin trading volume is $27 billion per day. Strategy's entire position as a share of 1 day of volume. They are not the marginal buyer. They are not the marginal anything. Bitcoin does not need them. Now the Saylor stock sales, $370 million. I'll be honest, that one looked sketchy, but Larry walks it through. Saylor was exercising warrants. Warrants have expiry dates. You exercise them, you owe taxes, you sell to cover. This is documented. It's a footnote in a 10Q, not a betrayal, allegedly.
The three that really qualify are gold, silver, and Bitcoin.
And from day one, that's why I get all these stupid messages. People like, you used to be really bullish on Bitcoin, now you're not. It's like, no, I'm making a lot of nuanced points that are offending people because they're emotionally invested in Bitcoin. And what I haven't said is, I think Bitcoin's going to zero, or I hope it doesn't make it. I've never said any shit like that.
No, I know
all I've said is I think Phong Le is full of shit. And like that seems to be the key point that me and you were disagreeing on. And the one thing I said on Fred Krueger's Spaces the other day that, of course, everybody fucking took big offense to was, I don't know. They asked, well, where's it going to be in 18 months? And I said, I don't know. And he said, well, do you agree it's a good buy at the 200-day moving average? I said, I don't know, because to be making technical analysis on a 17-year-old asset class that you and I both know, we don't know which way it's going, if adoption will continue or if it doesn't. Sure, you think it's more likely that it's going to survive than it isn't, but shit happens sometimes. For me to come out and forecast it's going to be X on X date like he does on his Twitter, it's just not me. And that is what people took great offense to. That the fact that that I came out and said I don't know, when really nobody knows. It's not just
nobody
me.
knows.
I'm just the only person saying I don't know. Everybody else got it all fucking figured out.
I don't have any problem with that. I don't know. I don't know where it's going to be. I tend to believe, absent some significant change, which in the adoption pattern, that it's going to continue to do what it's done for 17 years, which is go up and to the right. Now,
do you think an equity market crash could?
Oh, absolutely. I mean, look,
could affect the adoption pattern.
Not entirely. I mean, I think it, but I think it could hit the price. I mean, look, in a correlation of one event, it's going to go down. I mean, it's liquid, right? In fact, it's one of the most liquid things out there. You can sell it very, very quickly. You sell it 24/7. I mean, you can't access your bank account over the weekend. You can sell this thing. I remember watching it in 2020 when, that whole thing, when COVID broke out and they all got hit right before Powell came in with his anything it takes speech. And, it got hit about the same as gold at the time, as I recall. They all kind of got sold, as did stocks, as did bonds. In fact, the bond market went no bid, which is part of why he came out with his speech. But and so, if we get another one of those events, sure, it's going to be very volatile to the downside very briefly.
And that right there is the most bullish thing I've heard in weeks. Not a price target, not a guarantee. 3 words from one of the most respected hard money analysts alive. I don't know. Do you know how rare that is? You've got 14-year-olds on TikTok giving you Bitcoin price targets with 2 decimal places. And here's Larry Lepard going, I believe in the direction. I don't know the path. And that is not bearish. That is honest. And honest is bullish. So let's be honest. Cypher brilliant guy. Legend, by the way, went on record saying he'd admit he was wrong if Bitcoin hits 15K. Larry's response isn't dismissal. He acknowledges a 50% drawdown or setting a first lower low in history would create real stress for Strategy's obligations, as well as maybe people's personal belief in Bitcoin as a long-term store of value, etc. He's not pretending the risk doesn't exist. He just thinks it won't happen. And he's got 17 years of data backing him up, as well as Cypher, hence why he made that statement. Higher highs, higher lows, every time somebody is called the death of this trend. All right, the bear points, fast. Bear 1, management credibility. Saylor is saying never sell your Bitcoin while selling 370 million in stock, plus the Bitcoin sales looks bad. Optics problem, real, that's a real thing. Bear 2, leverage is leverage. Layering financial products on Bitcoin collateral introduces downside acceleration and different risk vectors. That's math, not FUD. Bear point 3, Bitcoin is 17 years old. Bitcoin isn't dependent on some power law chart model. Price prediction on a new technology is genuinely hard. Anyone telling you otherwise is selling something. Me personally, I wake up every day not understanding how Bitcoin isn't at 2 million already. And then I laugh at the failure of the state education system because it just gives us more time to stack. Bear point 4, broader equity crash creates short-term correlation. We saw it in March 2020. Bitcoin and gold got hit before Powell hit the printer. It can happen again. Those are real. We're not dismissing them. Bull point 1. 54.5 billion against 1.7 billion. The math isn't even close. Bull point 2, 27 billion in daily Bitcoin volume makes Strategy's position a rounding error in any forced unwind scenario. Bull point 3, 0.3% of holdings sold, not a fire sale. It looks like it was some accounting stuff. Bull point 4, and this is the one that matters, BlackRock, Fidelity, sovereign wealth funds, millions of retail investors. The horse is out of the barn. Going after Bitcoin now means going after your own voters, your own constituents. This is not 2013. This is infrastructure. Obviously, the bull case wins. Okay, speaking of not trusting management with your Bitcoin, you just watched like a 10-minute debate about whether a company can be trusted to hold Bitcoin responsibly, whether their financial engineering creates counterparty risk, whether their obligations could force them to sell your asset. The whole debate is counterparty risk. So let me ask you something. Where is your Bitcoin right now? We're about to bring it home today, but before we do, look at our likes.
3 or 4 times, maybe.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Not your keys, not your Bitcoin. I need you to actually internalize this. I don't care if it's on Coinbase. I don't care if it's an iBit. I don't care if it's MicroStrategy. If someone else holds your Bitcoin, you're a creditor. You have a claim, not a coin. The fork wars were fought by plebs, by node runners, by people precisely so that Bitcoin couldn't be captured by corporate interests. Don't hand it back voluntarily. The Bitcoin way will teach you proper self-custody, hardware wallet setup, running your own node, full on-chain verification, the whole thing. Learn to use Bitcoin as Satoshi intended by separating the money from state. Scan the QR on the screen, click the link in the show notes, book your free 30-minute consultation today. Here's the dirty secret about every other Bitcoin-backed lender. They're lending your collateral out. They're rehypothecating it. They're playing the same fractional reserve game the banks play with your Bitcoin. And when the music stops, your stack is gone. Ledn doesn't do that. Their custodied loan product means your Bitcoin sits in cold storage. Never lent out, never touched. That's the Satoshi standard. 8 years, $10 billion in origination, 0 customer Bitcoin lost. Lowest rates in the industry, no hidden fees, no fine print, auto top-up so you never get liquidated by a wick. 0 prepayment penalties, paid off whenever you want. Don't sell your Bitcoin to buy a house, a car, a business. Borrow against it. Keep your stack. Scan the QR or click the link in the description and head over to ledn.io.
They specify just, I think there are 2 potential models for where we go here. I think one is just, wash cuts. And, they're going to, we all agree they're going to kind of try and run the economy hot.
Yes.
Trump has said he wants to have 13% GDP growth. Well, you can get 13% GDP growth, but it's with high inflation. Okay. And so let's say they do the run it hot strategy and they lie about the inflation, the task
Which
force.
they have to. That's what
they have to. Right. So I think in that case, gold goes to 7,000, 6,000, 7,000, which is, that's up 70% from here, but it's not 12,000. Okay. And I think in that case, Bitcoin goes to, call it 150 to 180. Okay. So that's a 3x from here. Okay, good. Let's say something really breaks, like, the bond market pukes and just, Japan blows up and everything blows up and we get, big print number 3, because 1 was 08 and number 2 was 2020. So now we get the third one, and Fed balance sheet's not going to be at 6.7 or anything. It's going to 18. Okay. Like, it's very clear, they come in and they're just fire hoses of money. Okay. In that case, yeah, gold's going to 15 and Bitcoin's going to 400 or 500, and silver's going to 500. That's kind of a new, and at that point in time, I think the entire, and by the way, the stock market, maybe it goes up, maybe it doesn't. It probably goes up in nominal terms, but I don't think it keeps pace with these other 2 things. And the reason for that is just that, the inflation is going to be so high that that's going to eat into corporate profits. So, because if you look at the 70s, the stock market kind of,
that's what happened.
Yeah, it went sideways, right? So I think in that scenario, it's all going to go a lot higher.
Okay, pause. Gold to 15K, Bitcoin to 400, 500K, silver to 500. Now I want you to hear what Larry is actually saying, because it's not hype. He is not doing the Bitcoin hits a million by Tuesday TikTok dance. He is saying there are 2 scenarios on the table, and both of them, the Ponzi that's been running since 1971 gets worse. In scenario 1, they run it hot. Controlled inflation, managed debasement. Your purchasing power quietly disappears while the S&P goes up nominally, and you feel fine until you don't. In scenario 2, Japan blows up. The bond market pukes. They print big number 3, 2008, 2020. Now, Weimar cycles, they contract. And at that point, the assets that cannot be printed go parabolic. And as you can see, the hard assets are volatile in Weimar times. It's interesting how history rhymes. We're still in the early innings of that, though. Gold, silver, Bitcoin, the central bankers are playing an evil, dreadful game. And the opt-out is just sitting there. Unprintable, unconfiscatable, uncensorable. And you're watching this video, which means you already opted out, right?
One of the biggest problems that Bitcoin has had to deal with ever since its inception is that Bitcoin and crypto are not the same thing. Crypto is often very fraudulent, very bad, and that's what Sam Bankman-Fried was all about. Bitcoin is actually a digital innovation. It's the creation of digital scarcity. It's a network that nobody owns or controls. And, a large number of people have come to believe that it's a store of value. The fact that we have a president who allowed it, that's good. But the fact that we had a president who was an enormous crypto grifter, that's bad. And that crypto grift, it rubs off onto Bitcoin. A lot of people look at that and they say, oh, well, that's just part of Trump and Bitcoin. And I hate Trump and fuck Bitcoin. So I would argue that he actually hasn't, on balance, been all that great for Bitcoin. And I certainly don't think he's been that great for crypto, although he's a perfect example of what crypto is all about, which is just, fraud and bullshit. To your point about the Dems coming in and getting after it, yeah, I mean, there's no doubt that, they see how much money he's made on it. They see, CZ getting a pardon. They see, World Liberty Financial and what his sons have taken out of it. And yeah, they're very likely to want to go after that in some way, shape, or form. The problem they've got is that the horse is out of the barn. And, now BlackRock runs an FTF, an ETF. Fidelity runs an ETF. Millions and millions of their constituents own it. And by the way, it's ultimately uncensorable.
This Bitcoin is not crypto. Scam, bankster, fraud. Crypto, the Trump meme coin. Crypto, the dog coins. Grift season to get rich from your phone junk crypto, cloud mining. Bitcoin is the creation of digital scarcity, a network that nobody owns, nobody controls. A protocol like TCP/IP. You don't fight the protocol, you build on it, or you lose to it. And the government going after it now? I mean, okay, good luck. BlackRock is in, Fidelity is in, and Larry Fink's like the real president. Millions of voting constituents own it. You're not going after an anarchist protocol anymore. You're going after your voters who now really enjoy an anarchist protocol because you the money so much. They would rather use it magic internet money created by an anonymous internet wizard. The horse is out of the barn. Bitcoin is the digital equivalent of this phrase, power to the people. And that is why the death spiral narrative dies. When you set up your Bitcoin wallet, did you actually plan for real life? Because phones get lost. People forget things, stuff breaks, and eventually, whether you like thinking about it or not, your Bitcoin may need to be passed on to someone else. That's exactly why BitKey makes so much sense. It's like the idiot-proof hardware wallet. BitKey is a self-custody Bitcoin wallet designed around the fact that life happens. There's no seed phrase sitting on a piece of paper that can disappear forever, and there's no single point of failure where one mistake means your Bitcoin is just gone. The new BitKey device even has a touchscreen, so when you're approving something important, you can actually verify what's happening before you approve it. Transactions, recoveries, address changes. You can see it yourself instead of blindly trusting that everything is okay. Recovery and inheritance are built in. Lose your phone, you have a recovery path. Want to make sure your family can access your Bitcoin someday? You can set that up too. No extra subscription, no separate inheritance service, no insanely complicated process that requires a computer science degree and a treasure map. It's just a much more practical way to hold Bitcoin for the long term. Get your BitKey today and use promo code SUNDAY to get 10% off. That's it. Get your big. All right, let's bring it home. The bears are not wrong that leverage creates risk. Not wrong that management credibility matters. Not wrong that a 50% drawdown would create stress. But here is what they are wrong about. They are wrong that strategy is the marginal buyer, seller, or fate decider of Bitcoin. The math says otherwise. The market says otherwise. And more importantly, they are wrong that Bitcoin's story is Michael Saylor's story. It isn't. Bitcoin was here before strategy. It will be here after strategy. It survived like 700 eulogies. It's like Brick and Anchorman. Exchanges collapsing, governments banning it. Every single "it's over" moment ever posted on that freak show Reddit. The Ponzi is dying and the exit is orange. Stay humble, stack sats, don't sell your Bitcoin, smash the like, hit subscribe, give us a pamp, and let us know what you think down below. Love you guys. Catch you next time. Peace.
If you prefer to go down with the ship, you.